We did try to get with us earlier Phil Naylor from the Mortgage and Finance Association. Pleased to say he's with me right here now with some audio problems earlier. Thank you so much, Phil. Great to have you to stay a bit longer so we can get you on air. We've had a lot of interest rate cuts. We know that from this statement today it seems the RBA is pretty comfortable leaving things on hold for a while to come. What kind of impact have you seen the rate cuts to date have? We're talking 125 basis points that the RBA has already delivered. Not all of it passed on by the banks, but a lot of it.
You look, in normal circumstances where you've got rate cuts like that, you've got inflation fairly low, when you've got unemployment fairly low, you'd expect borrowers to be racing in to the housing market. And in fact, the growth of lending over the last year or so has been one of the lowest growth rates for about 2 or 3 decades, around 3 or 4%. So whatever impact the rate cuts were supposed to have on the housing market and the borrowing market, it hasn't occurred yet. The RBA said they're waiting to see whether there's a lag, and maybe there will be, but I would have thought that from our research, borrowers are just not sure what's going to happen. There's a lot of them who think that there's going to be more cuts, and they're waiting to see that happens before they engage with the borrowing market. And I think there's also a bit of a nagging concern that maybe all's not good in the economy, and maybe there's a possibility that unemployment will increase. So there's some of the things that are in the background, but I would think we're not going to see any change in the borrowing market in Australia until rates are cut further.
But even then, what difference would it make? 125 basis points off, and we all say, oh, not so sure, it could go cheaper. I mean, well, say they cut 50 basis points, which maybe Stephen Koukoulas has said they would have to do probably to catch up to the kind of rate cuts he's talking about. But
that's true, but I think there's been so much commentary in the news over the last couple of months about being so many cuts between now and Christmas. A lot of people are talking that language. I think borrowers are starting to think, well, if that's going to happen, let's wait, let's stand on the sidelines and see what happens. And also I think we're probably in a new environment now, whereas last decade, 3 cuts of 25 basis points or more, 125, would have had borrowers rushing into the market. Maybe that's not enough to incentivise them these days. Different market.
Yeah, because kind of rates rushed up, they rushed down again, they've been on the way up. Yeah, we're kind of used to seeing big moves. And
I think quite clearly from our research, borrowers are more risk averse than they were probably a decade ago. So they need more incentive to be sure that if they come into the market, they're not going to be caught out. So, they want to make sure that if they come in, rates are going to come down and they're going to stay down for some time.
It does beg the question when you say borrowers kind of haven't done much, new borrowers particularly we're talking, haven't done much, they think another cut's coming, they're probably going to be disappointed, going on the economists we're speaking with. Then what does stimulate the housing market?
Well, interest rates being the big incentiviser to come into the market. I mean, the other thing, I suppose, is just seeing the economy settle down and be sure that the economy has settled down. Certainly, I mean, we're going into politics, there's concern about who's going to be running the country, all those sort of things prey on people's minds, and certainty is the big incentiviser, as well as interest rate cuts.
Okay, and just a very quick final thought. How competitive are the banks being for people's money? Because there was a period there where new borrowers being offered, we heard, 1% less than even existing borrowers just to get those mortgages on their books. What kind of competition are you seeing now?
That rash of competition, and I put that in quotes,
exactly.
It's probably faded out a bit now. Our big problem is that you need more than 4 big players in the market to get competition, and we're certainly suggesting that we need a number of smaller players to be able to step up to the plate and compete to give a good choice across the range of lending products.
There's plenty out there. We just don't seek them out, do we? As Australians, we're still sticking to the big 4.
That's true.
There's a lot of options.
But a lot of them just don't have enough funding to be competitive. I mean, they can have lower rates, but have they got sufficient money to lend at those low rates? And as they did, the non-bank lenders 10 years ago had about 13 to 15% of the market. Now they've only got 1% of the market because they just haven't got funding to be able to compete.
All right, thank you so much, Phil Naylor. Appreciate your time on the channel today. We've got to get back to Carson, who's still outside the RBA Martin Place. Carson, afternoon to you.